Today, Bitcoin falls to the $96,000 level. MicroStrategy reports earnings and takes on a new name. Plus, Anchorage Digital CEO Nathan McCauley discusses his Senate testimony on debanking of crypto businesses. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto markets are in the red this morning. As of noon Eastern, Bitcoin fell 1.5% to the $96,000 level. Ether fell by 2.3% to $2,700, and XRP dropped 6.5% to $2.30. Okay, let's talk about the top stories. MicroStrategy, the software company known for its aggressive Bitcoin buying strategy, has a new name, Strategy. The company dropped the news the same day as its fourth quarter earnings. CEO Phong Le said on the earnings call that Strategy was halfway to its goal of raising $42 billion in capital. Now, that plan includes $21 billion in equity and $21 billion in fixed income. Strategy also said that it had acquired $20.5 billion of Bitcoin since the end of the third quarter. It now holds about 2% of the asset's total supply. As of noon, shares of the company fell around 2.5%. Next, the European Central Bank hopes that President Trump's embrace of crypto will accelerate development in Europe. That's according to Reuters, which spoke with board member Piero Cipollone. He said that he hoped Trump's support for stablecoins might speed up legislative backing for the digital euro. The industry has, of course, long worried that the U.S. lagged other jurisdictions' crypto regulation, citing a hostile attitude toward digital assets before Trump's administration. Now, stablecoins have been a primary crypto focus for rulemaking, with Senator Bill Hagerty announcing a bill earlier this week to support a regulatory framework around the asset group. Last, the FDIC just dropped hundreds of pages of documents detailing its supervision of crypto. The banking regulator's acting chair, Travis Hill, said yesterday that the documents were released ahead of a court-ordered Friday deadline. Hill said that the release was part of a commitment to enhance transparency beyond what's required of them. The documents include communications that the FDIC had with 24 banks that received pause letters, and hundreds of pages of communications between the FDIC and regulated businesses dealing in crypto. Now, this comes as Congress investigates complaints of debanking from the crypto industry. The House Financial Services Subcommittee on Oversight and Investigations is slated to hear testimonies this afternoon, including from Mara CEO Fred Thiel and Coinbase Chief Legal Officer Paul Grewal. The Senate also held a hearing on this topic yesterday. For our main story, yesterday I spoke with Anchorage Digital CEO Nathan McCauley, who testified in that Senate hearing. He broke down what he shared with lawmakers. So Nathan, you just testified before the Senate Banking Committee on the issue of debanking in the U.S. Tell me about what you shared with lawmakers today about how that plays into crypto.
It was an incredible opportunity at the hearing today to share a little bit about both our story and, more importantly, I think the story of the entire crypto industry, how the past 4 years, and particularly the debanking that has gone on, has been just in a whole host of ways negative for the crypto industry, whether that's more of the business moving offshore, whether that's loss of trust in the American financial system, whether it's just the heartbreak of many entrepreneurs who were not able to build their businesses. We have seen all of that really come to an end now. And I think the Senate hearing today was the first step in that process.
So talk to me about your experience in particular, how Anchorage has dealt with the debanking issue over the last few years.
Yeah, so our story is pretty ridiculous. And I think a lot of the senators, when hearing it, were floored. We had a bank that we had a growing relationship with for a number of years, who basically on a dime decided to turn off our bank account. This was a very basic banking account that we used for checking and payroll, these kinds of things. And the irony of this is that we ourselves are a national bank. And so if even highly regulated by the rules institutions like us were having problems with debanking, you can only imagine what was happening to the smaller entrepreneurs who didn't have the resources to be able to marshal in order to keep their bank accounts open.
So you said that your experience is not unique. The industry has been talking about this idea of Operation Choke Point 2.0 for several years now. For someone who hasn't heard about this, can you explain how that's impacted not just Anchorage, but the industry in general?
Sure. So one of the things that happened this morning was a pretty significant document release from the new chair of the FDIC, where in those documents, you see a very clear pattern where federal bank regulators, in this case, particularly the FDIC, were instructing banks to stop working with crypto clients. What that means, if you are the account holder at one of those banks, is that you get a call out of the blue saying your account will be closed. You are given no recourse, no opportunity to appeal, and you have to go find another bank. But guess what? That other bank has also been told by the FDIC not to work with crypto clients. And so it basically acts as a systematic choking out of an industry where you can't even do basic business in America if you don't have a checking account. And so that's really what we're seeing evidence of now. And I testified to our story about that. There were others that testified in the hearing about their stories there. And there are so many untold stories across the industry that I think are coming to light with this.
What were lawmakers most interested in with respect to your story? And were there any questions today that stood out?
Sure. I think the questions to me that were most productive were what comes next? Where do we go from here? How do we prevent this from happening in the future? If it happened today with crypto, in the past it has happened with other industries. What might be the next politically disfavored group that ends up with a debanking issue? And so there's a lot of different areas that can be dug into. There were some policy procedures thought through about, is this something where you limit the banks? Is this something where you limit the regulators? Lots of discussion there. Ultimately, on our side, we think that it's much more important to make sure that the regulators themselves have control over this and are not themselves causing the debanking into the future. And I would say, personally, that I think the federal regulators ought to apologize to the crypto industry for what has happened here. I think that would be a really nice step towards righting the wrongs of the last several years.
Now, there are separate probes into this issue of crypto firms and executives being debanked. The Senate and House are both investigating this issue. To your point, what do next steps look like through these two different bodies?
I think right now we're in a discovery phase. That light on this will disinfect some of the issues. And so you're right, there is a House hearing tomorrow. And even at the hearing today, there were several discussions of potential follow-ups, whether it's potentially having more hearings about this, thinking about regulatory agencies being brought in and talking a little bit about this. And then I think you're also going to see, similar to what has happened at the FDIC, likely to see other kinds of transparency happen as more of the new administration's appointees take over at the various government agencies.
Now, you were the sole voice today speaking to crypto's struggle with debanking, as I understand it. There were other witnesses speaking to this idea that conservatives have been debanked, but there does seem to be this tethering of the crypto debanking narrative with the claim that conservatives have been debanked. But in the crypto space, this is non-political, right? If so, how do you assert that narrative in a divided Congress to avoid making it a partisan issue?
Sure. So I think the biggest thing there is that this was indeed a hearing that covered a wide variety of topics. Crypto was only one of them. And as you said, I spoke to that. There's others that spoke to the debanking that happened in other industries. The meta level point must remain that if this can happen to some of us, it can happen to any of us. And we certainly should not have a banking system that on a whim can pick a set of people who are disfavored and cut them off from the banking system. Whether that's conservatives or crypto today, tomorrow maybe it's some other group that whoever is in power disfavor. And so I think both sides of the aisle in the hearing today recognized that that is not something that should be possible. And both sides, I would say, proposed policies and particular agendas that would help to strengthen the banking protections available within the United States.
Now, you've spoken to different potential outcomes here. What's the ideal scenario? What are you and other members of the industry fighting for ultimately?
So on really kind of two phases of that. The first one is there were several interpretive letters or guidances put out under the previous administration that just need to be undone. Not dissimilar to what we've seen with SAB 121 being repealed and reissued so that it's more reasonable. There are several sets of these kinds of interpretations that are out there that need to be undone from the federal banking agencies as a first immediate step that's possible. The follow-up there is looking at how do you prevent this in the future, where we start to think about what are the long-term policy changes that could be made there. And I think the senators and then over on the House will also have some good debate about that. And we'll come up with, I think, a good system moving forward.
We've also seen a lot of movements out of the SEC. You mentioned the repeal of SAB 121. What does the future of crypto in the traditional banking system look like here in the U.S.? And is that something that came up with lawmakers earlier today?
Absolutely. This is a big topic. The thing that's been so wild about what happened with Choke Point is that many of the banks across the United States wanted to get into the digital asset business, digital asset ecosystem. We were in talks with dozens of banks, including most of the global systemically important banks prior to all this, about helping them chart the roadmap for adopting crypto on their own. And so with SAB 121 repeal and some of the things out of the FDIC coming to light, many of those conversations are picking back up. We are already in conversations with several of the large Wall Street firms about what it looks like for them to come back into crypto. And we couldn't be happier to be supportive of them. Many of them like the idea of being able to work with a national bank and want to use us as infrastructure to help them bring those business lines to the forefront.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.